Tom, welcome back to the program. So were you listening in there
Susan,
to
nice to see you.
the State of the Union address coming from the U.S. President Obama? You know, a lot of investors picked the U.S. market to be the place to be in this year.
Susan, the President was sounding very statesmanlike in the speech, and he covered a lot of territory in a number of areas. But overall, I think the speech was quite upbeat, and a number of the initiatives he announced to do with construction, energy, and other policies are actually quite positive for the market, I would say.
Yeah, and everyone was watching out for what he would say about tax and the tax code, because everybody wants Bush-era taxes to be rolled over. What are you expecting there?
There are some potentially very divisive issues before the United States to do with taxation. But I do think at the moment the most interesting one and the one at the forefront of people's thinking is actually the private equity carry, which is basically the way private equity people are compensated. That will be an election issue, but there are much deeper issues in taxation that will have to be explored. Clearly the issues for the election will be the haves and the have-nots, and they will be taxation not only on what I mentioned before, private equity, but on the $1 million-plus group and that sort of thing. But I do think that taxation won't be the only driving force. Employment will be a much more important feature in the upcoming election.
That's right. President Obama patting himself on the back, saying that he's created more jobs in the last year than the U.S. economy has added over the last 5 years. So that's kind of impressive. So, Tom, what about the U.S. markets? Are you putting cash to work there?
We are. In fact, Susan, a couple of the things we notice in the market is that balance sheets in the United States are very, very cashed up. And there are some pockets of the U.S. economy, energy, which we just mentioned, and consumer products, healthcare, and even to some extent the non-bank financials, where there's cash building and building. And at some point there's going to be pressure from shareholders, both institutional and individual, to deploy that cash. Either give it back to shareholders through special dividend payments or merger and acquisition activity. And I certainly prefer the latter. I think M&A will really surprise the market because there are a number of instances where M&A could actually make U.S. industry more efficient, and it could also be very supportive of the stock market. And I think the year ahead of us is going to be a very good year.
Yeah,
well,
what about financials?
Actually,
yeah, go ahead.
I was very careful to separate non-bank financials, and in mentioning financials, we've had a big run in U.S. bank stocks in the past couple of months, especially the past month. And U.S. financials are actually quite expensive. And there's not going to be much M&A activity there because the sector is too constrained. So I think that it is probably one of the most overvalued of the U.S. sectors.
Yeah, well, President Obama identified and targeted, of course, Wall Street, saying no handouts, no bailouts, no cop-outs this time around, and he's instituting a new financial crimes unit as well. So for you, Tom, where's the best bet in the marketplace? What are you looking at?
Well, as far as markets globally, we again look to Asia. And when I spoke to your colleague just about a month ago, we talked about the Chinese policy following on from the reserve requirement cut, and that policy being a reduction in business lending rates. We do think that's going to happen relatively soon, and we're counseling our clients to expect that to happen because the Chinese market will actually lead the rest of the emerging markets in terms of an upward move. And I do expect the Hong Kong market after the New Year's holiday to come back and take us back very quickly to the July levels of last year. I think the markets are quite oversold, and we do need to prepare ourselves for a double-digit rally this year. And I'm the first to admit that most of that rally will be in the second half of the year, not the first half. But we still are positioned for that rally.
All right, Tom. Good to see you. Tom Murphy, Managing Partner of Family Office Research and Management.